The MTPredictor weekly market update for November 18th. Let's get right to it here. This is going to be a short trading week because of the holiday here in the U.S., Thanksgiving on Thursday, so the bond and equity markets will be closed. Friday, I think the New York Stock Exchange will close early at 1 p.m. Eastern Time. There are a couple pieces of news, I think, on Friday coming out, but most of it's going to be your existing home sales on Monday. Tuesday, your housing starts, and jobless claims on Wednesday will be the biggies, if you will. So let's kind of look again. We had our market top, wave 5 here. We talked about the tendency is that you correct after wave 5 back to this wave 4 DP, or decision point. So I use the software to take our decision point tool here, and I'm just going to extend that over so we can see that we hit that area. As you know, if you've been following the weekly market update, this was a critical area, because if this area holds as support, then the trend, which was up prior, should continue up. But if they take it out to the downside, then we got to go back to wave 1 here, the bottom of wave 1, take a decision point off of that, because this gives us a next target to the downside. I'll extend that box over here. And so the danger now is, we talked about on last week, if we got to close below this decision point area here in wave 4 and that low got taken out, then it's kind of pointing us lower down just above that 1300 in the S&P, the December contract. Now we had an interesting day on Friday because we had what looks like some high frequency or buy programs kicked in, and got a nice bounce there on Friday. But we'll see if that holds. There's a lot of tricky stuff coming into the end of the year. We just had the election here in the States, which obviously only happens once every 4 years. And so that was a big event that we've kind of gotten through there that had its impact on the market. We saw selling after the buying into the election and selling after the results. And then we've got this fiscal cliff, or the supposed fiscal cliff that they're going to have to deal with. There's some signs early that maybe the two sides are going to work something out. Obviously, it'd be in everybody's best interest to do so, and so that may buoy the market. But we'll see how this all plays out. If you're going to put money on either direction here, then obviously control your initial risk, have a larger reward. And so if you're wrong, if your analysis is wrong, you lose small. If you're right, you can win bigger. The other thing that we've got going here, if I put the Elliott waves on where we are currently, is we've now got a little 5-wave pattern down here, which means the tendency is we could correct back to this wave 4 DP. So we've got two potentials here. Here's your next support, here's your next resistance just above 1440 in the S&P. So if we do get the scenario of a rally into the end of the year, into the Christmas holiday, all that, we should see this area here. If what this is telling us is that we may have one more drop to this 1300 level before we get any type of rally here. STF is still showing strength to the downside. Question is, has it peaked out here? We'll see. We did get a confirmed Hindenburg omen last week on Monday, I believe, and that just tells us that the internals for the market are weak. There's a divergence between the new highs and new lows. Typically in a normal market, you're either making a majority of stocks making new highs or new lows, but not both simultaneously. So when we get that divergence, it just tells us that the market isn't healthy, is unhealthy. And the window for that tells us that there's a potential market crash ahead. It's usually after the market has rallied is when it happens. So I'd be surprised if it crashed from here, since we're already selling off and maybe are oversold, let's say, and due for a bounce. So that window for that omen is good until March of 2013. So under the scenario that we rally into the end of the year, and then maybe make the top, and then maybe potential for a crash early in 2013. We'll see, but that's out there. Every omen has not necessarily produced a crash, but there hasn't been a crash without being first preceded by one of these omens, this unhealthy condition in the market. So it's something we pay attention to. Gives us a little heads up that we got to be cautious to the upside, even though things may rally, let's say into the end of the year. That may be when they decide to really take things down. So we'll see. Something to be aware of, that's all. So let's take a look at this intraday, this little Friday bounce here, and I'll show you a little bit what we were looking at in our trading room. Here's the 3-minute chart of the S&P futures contract, and you can see, I'm just going to eliminate the day's trading there. Here was the opening candle. Basically, here's the previous day's trading, and we basically opened where we closed the previous day. Now these areas here, these are decision points from the larger degree time frame, our 15-minute time frame. This is going to be major support, and we have these on the chart ahead of time before the market opens. And this was our major resistance areas here. So what we're saying is, if the market sells off into this area, then the trend which was down should now turn and become a trend in the upward direction. So we'd want to be a buyer down here basically, and a seller up in these areas. Again, support and resistance, or demand and supply, if you will. So when the market did come down into this area, this was the first attempt that that the market may be turning in the other direction. So we had a high volume spike in here, this red volume bar telling us that there may be professional buying stepping in here, and so some of our traders may have set up a trade to the long side here. Well, I guess this was the decision point resistance from this swing here as a target. Here was your major 15-minute decision point there. All right, but this one, as it got going in this particular market anyway, began to rally as anticipated, but then fell off, and they tested this area again. Now I'm just going to take a decision point off of the bottom of this wave here, and you see here's our next level support. Still all within this kind of decision point range, and you see here, this is what we like to see, is the software gave us a decision point buy signal. One of the things it picked up was this, as we got a lower low in price, we had this higher low in the oscillator. So it picked up that divergence. There was a high volume spike here telling us, again, professional buyers may be stepping in. The next candle is what we call our blue buyers candle. That tells us that buyers are now overcoming sellers in the support area again, and therefore this may confirm that it is in fact institutional or professional buying coming in. So we just put the right click and put the analysis on. This is what we call an advanced trade setup. So the bigger trend, according to our trend indicator, was down, and so our new traders would avoid this trade, but our more experienced traders would be liking this particular setup in a major support area with professional buying potentially stepping in. There's the target there. Again, risk is controlled. In this particular account, it would be a trade of 4 contracts, risking the maximum risk of $400 for the account. The stop there at 1340 with a target, the software tells us, is 4.3 times the size of our initial risk. So if we're risking $400 here, we can take out $1,700 at the target there. And this is where we saw some interesting buying coming in. Got another high volume spike off of this candle, so it was a good exit there, at least temporarily, and then market rallied into our major resistance area. I'll clear this off the chart. So what we're saying now, that the trend which was up is now going to become a trend in the other direction, or at least correct, and therefore this confirms that the sellers are now overcoming the buyers, and maybe this is an area where this is another area you could play to the short side. Again, you want to capture at least twice your initial risk. If you're going to risk, in this case, let's say $338 on a 3 lot, this would give you 3 times your initial risk. All right, and that target was hit. So anyways, major support, major resistance, that's how we like to set those up during the day. These played out nicely. If we just look at the Dow quickly here, same day. Now this was the first opportunity in the Dow. Again, here's the major support, here's the major resistance area, here's your blue buyers candle, the high volume spike. And so let's just take a decision point off of this swing here. So there's the initial target. This is the last swing into the low, so we take a decision point off of that swing and use that as a target. And here the software tells us on the Dow you could go along of a 3-lot, again risking 300 to take out a potential $1,200 at the target, which would be 3.5 times the size of our initial risk. Now this one, as the S&P would have stopped you out here, if you had left this trade on, it never reached the stop there, so you'd continue to be in that trade. If you moved your stop to your break-even level at this point, or your entry, you'd had a break-even trade. But right behind it, again, that high volume spike comes in. Again, in the major, we're still in this major support area, as we saw in the S&P. If I just clear off this analysis, all right, we have to wait for that blue buyers candle to confirm that the buyers are now overcoming the sellers in the support area. We get that here, and so we can set up our own trade. This is where the DP buy signal, the automatic one, came in the S&P. And the target's going to be the decision point. It's a little off on that. We want to make sure that we have at least twice our initial risk at the target, so we get about 3.8 times our initial risk there. So we can take a low risk, $400 risk, to make about $1,500. Again, there's no guarantee that it will play out. In this case, obviously it did. Or if you played for the larger target here, the major 15-minute resistance area, you could have turned that 3.5 hour trade into a 7-hour trade. So on a $400 risk, could have taken out about $2,800 at the target there. So again, you reach that resistance. Look, I mean, right to the tick. It hit that red seller's candle and it sells off. Some buying later stepped in. A little high volume spike here. Maybe another opportunity. There wasn't any major support area there, but it did tell you that the buyers may be stepping in there as the market moved higher. Another high volume spike came in, and the market came back up and tested that resistance level there. So just an interesting day. Thought I'd share that with you. Don't typically look at all the intraday stuff on the weekly market update, but a little taste of it there. All right, let's continue and let's take a look at, let's bring up the Euro US dollar here. All right, in the Euro US dollar, again, we had that 5-wave pattern down here. As we always say, that typically they'll correct at a minimum back to this wave for DP. So if you were getting long in here, then that was your initial target. STF was strong during that period, so you could have trailed with a trailing stop and you would have been stopped out here. Anyway, right behind it was this TS3 sell signal. The STF was neutral here, meaning we can go long or short. And that's now hit the target. Of course, we saw that last week of about 2.6R. And as this was selling off, what we were seeing in the dollar index, and this is what we want to watch here, this support, this major support area here on the daily chart. In fact, we'll look at the weekly chart because that's really the one I want to look at. That decision point buy signal, this trade is still alive, if you will. As far as the target hasn't been reached yet. It's still out there, 85.33. But here's that daily support, and we've rallied off of that, and that's why we've seen the euro has sold off. So we'll see the next major resistance area is just inside that target, and then the next support area here is going to be right around that 78.33 area in the dollar. So we'll see how that plays. It's kind of in the middle here. We'll see if this rally can continue. It hasn't been real strong off of this, but it has continued to continue to make new highs each week here. So we'll see if that continues, or if we do get some pullback there and some strength back in the euro. We'll look at gold on the weekly chart. We've come just shy of the next resistance level here in gold. We've seen, in fact, let's just go to the daily chart. You'll see the daily chart. We hit the little resistance off of this B swing, but here's the largest degree target. Now this, if you're long, happen to be long gold at this area, you can you can move your stop to your entry, so you're in a risk-free trade at this point, which is what we like to do on the bigger time frames. But you see the larger degree target there up at 1813. And then back to the weekly chart here. This, we hit that target, and then we get the pullback here. All right, in silver, let's look at the weekly silver chart here. Again, we had a little breakout in our rally into, this is a daily resistance, so we pulled back. We had some potential buyers coming in on, I think that was Wednesday. We got a rally back in silver, some selling off at some more resistance there. We'll see on the daily chart here. Again, it's similar to gold, same basic setup here with the larger target here. So we basically came into that DP off of the wave B here, and we got some pullback here. Again, if you're long this as a swing trade, have your stop to your entry there around 31.25 or 31.24, even better, for a risk-free trade. The target there is up just above 36, around 36.04. We'll see how this plays out. Maybe a little inverted head and shoulders pattern forms here, and if so, we get a little pullback here, and then they take out this, what would be the neckline. If this shoulder finished forming, if they break that out, then we should see at least a measured move from the top of the head, which would be the bottom here, to the neckline, extended out, which probably put us around 35.50 area, right around where this supply area came in. If they can get through that or just push through that, then we could see that $36 area. So we'll see. Again, a lot of things happening here coming into the end of the year that could come into play. We'll see how it plays out. But anyway, we'll go ahead and leave it there. I wish you all a wonderful Thanksgiving holiday here in the States, and just remember that markets obviously will be closed Thursday, but also will close early, at least the NYSE on Friday, and a lot of the news will be early in the week. So take it easy this week as you head into the holiday, and we'll see you back on Sunday to review and see what happened. All right, have a great rest of your week, and we'll see you back on Sunday.